Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Tata Technologies. It's a engineering R&D company from the Tata Group stable, coming out with an IPO, which opens on November 22nd and closes on November 24th. Price between 475 and 500 rupees a share. It's totally OFS of over 3,042 crores, and it's nearly 15% of the equity that's coming in. To be clear, Tata Motors did sell 9% to TPG just a month back. And joining me is Warren Kevin Harris, who is the MD and CEO of the company. Warren, thank you very much for joining us on BQ Prime. The first question that everyone will have is that a month back, your promoter Tata Motors sold the stake at 401.8, and you're selling now at 475 to 500. Mostly it will go at 500. How come you've taken a premium within a month?
Sajid, it's great to meet you, and it's great to be on your show. And thank you very much for your interest in Tata Technologies. I think the deal between Tata Motors and TPG was a bilateral agreement between a willing buyer and a willing seller, and I'm not really going to comment on that. But what I will say is that the price that we are listing at is a price that's been informed by the work that the banks have done in soliciting feedback from the investors after the roadshow. They've made a recommendation to the board. The recommendation has been adopted and has been included in the red herring. So that's the process that we followed, and that's what we're supporting.
I get that all managements take the help of the bankers when it comes to just justifying the pricing, because the same selling shareholder is selling again at 500 a share. So that's a question that bound to be asked. 25% premium, which over what the person sold. So either they sold it cheaper earlier, or they're selling it at a premium now. Coming back to your operations, you're a engineering R&D company, mainly looking at auto sector. But your concentration risk is there with respect to Tata Group and also VinFast. Give a sense of the kind of work that you do for them and how sticky these contracts are going forward.
We're very, very excited about the customers that we work with, and the prospects that we represent for the relationships that we have in place. Because we're in the full vehicle space. Because one of the things that really differentiates Tata Technologies is our ability to be able to take on the responsibility of the development and launch of a full vehicle, and especially an electric vehicle. The relationship between ourselves and our customers is very, very strategic. It's very, very sticky, and it's something that is incredibly important, not just for us, but for those partners that have leveraged our services. If you look at our business mix, 10 years ago, the majority of the business that we delivered was delivered to Tata Motors and to JLR. Last year, JLR and Tata Motors was less than 33% of our aggregate revenue mix. And so we've diversified very effectively, but we continue to be absolutely aligned with both of our anchor customers in support of their market ambitions and the product plans that they are developing. And not only are those relationships important to us in terms of the volume that they represent, but it's also relationships that have allowed us to build capability at scale and incubate the type of skill sets that are increasingly important for the automotive and the mobility sector in a global context. So those relationships are an integral part of what the difference that matters that Tata Technologies represents.
So let me simplify it a little more bit, and for the benefit of our viewers and readers, what kind of services do you provide to auto companies? What kind of products that you develop or IP you develop for them? And how is it built, and what is the business model like?
Yeah, that's a great question. You know, we have there's two components to our value proposition. One is product engineering, and this is 2/3 of our services mix. And product engineering services really extends from the provision of people, the standing up of offshore development centers, all the way through the turnkey outsourcing of complete products. And when I talk about turnkey outsourcing, I mean from concept, detailed engineering of the mechanical product, the software product, test and validation, and then also the support that we provide for our customers in launching the products within their production facilities. So it really is an end-to-end capability that we represent.
Give me an example of a product to make it much easier.
The first full vehicle that we developed for our customers was the Discovery Sport at JLR. You know, in 2014, we were given responsibility for the steel platform at JLR, and we put a top hat on that platform that became the Discovery Sport. And that everything that you can see and touch on that vehicle, we engineered. And you know, not only did we engineer the product, but we also launched the product for JLR in their production facility in Halewood in Liverpool. You know, that allowed us to demonstrate to the market the capabilities that were available through the convergence of onshore teams and offshore teams in the ER&D space. Since that time, you know, we've followed on that success with the ES8 that we developed for NIO in China. That was their flagship vehicle that was launched in 2017. The Polestar 1, which was the halo vehicle that Polestar and Volvo used to introduce the Polestar brand. We took responsibility for that. We had teams in Gothenburg, the UK, India that developed the vehicle, and then we launched the vehicle in China in their production facility in Chengdu. More recently, and you referenced before, the work that we've done with VinFast. We've developed 2 electric vehicles for VinFast in an industry-leading time frame, 22 months from concept all the way through production launch. We've had teams from 7 different countries that have worked in real time in support of those programs. And again, it's a great testament to the speed at which the industry is changing and the capabilities that organizations like ourselves represent.
Great, you know, that gives the readers an idea of the kind of work that you do, and you know, the kind and the reason why Tatas are, or the JLRs are able to bring in new models very quickly to the market. Maybe give me a sense of do you only do the electric engine part, or is the ICE part is also within you? And between your revenue mix, what portion comes from the ICE and what portion comes from the electric vehicle?
Well, we're an organization that was founded in the mid-90s, and we've always been in the automotive sector. We are, according to Zinnov, the #1 Indian engineering service provider to the automotive space, and we're #3 globally. So we've followed the journey of the automotive industry since our formation. And so we have great breadth and depth in internal combustion engines, and we've worked on many programs that have allowed our customers to support their markets and their consumers with great products. But the industry is going through a fundamental change. You know, there is a pivot towards alternative propulsion systems and electrification. There is the move towards connected services, autonomous driving, and shared mobility. And we've been part of that journey since the outset. In 2010, Mr. Tata came to me and challenged me shortly after he'd launched the Nano to come up with an electric vehicle that was as frugal in terms of its pricing as the Tata Nano was. He gave us an MSRP target of $20,000. And at the time, battery packs were $12,000 and $13,000. And so we developed that concept that we call EMO, and we revealed that concept at the International Automotive Show in Detroit in 2012. That was the same show that Elon Musk revealed the Model S. And so we've been part of the electrification journey of the industry since the outset. And as now the industry is really investing very heavily in the move to clean emissions and into the sophistication that surrounds connected capabilities and driver assist capabilities. Our experience and the capabilities and the IP that we've developed over that journey has really differentiated us. And if you look at the majority of new products that we're investing in, they are predominantly electrified products.
How do you recognize your revenues? I mean, is it based on the kind of sales that happens post they go commercial, or there's a upfront revenue recognition in terms of R&D budget allocated to you and you charge the customers? Just to understand the business revenue model, how it works.
That's a great question. And we do not position any dependence upon our customers' ability to sell their products. And so there is no revenue that is attached to the volume sales that our customers represent. When we work with our customers, it's either on a fixed price basis or on a time and material basis. And so we recognize revenue against milestones on the fixed price projects, and we recognize revenue based upon the number of hours that we deliver on the T&M contracts.
And what's a mix between fixed price and time and material?
It's typically about 60% of our business is fixed price. It's about 40% T&M.
Okay. Also, I was looking at your margins, EBITDA margins at 18% levels. It's been consistent for last couple of years. Since you are doing a lot of premium kind of work, R&D work, why are the margins little lower in that sense?
Well, if you look at our business, we are not an India out company, and so we have a balanced onshore offshore proposition. If you look at some of our competitors here in India, their offshore rates are 70 and 80%, where if you look at our rates, they are typically 50-50 in terms of revenue. We think that we can improve offshore to about 65-70%, but because we're being entrusted with full vehicles, because we have to interface with the stakeholder groups inside of the OEM, we have to have people in the styling studio, we have to work with the suppliers, we have to work in the production facilities. We don't think that we're going to be able to get beyond 65-70%. And so we certainly have aspirations to take our margins over the next 3 or 4 years beyond 20%, but we do not believe that we'll be able to achieve the sort of margins, the upper 20 margins of some of the IT service providers.
I know. You have an in-house competition there with TCS margins coming in. So I was thinking, you are into high-end premium services. Why is your margin lower? So it makes sense that if you have a lot of onshoring that happens, margins would be hit by that. How about the attrition rate? Because this is also a very competitive space. 17% is your attrition rate, if I'm not wrong. How do you manage talent pool?
Yeah, again, a great question, because talent, is somewhat of a cliche that talent is our only asset, but it's also a truism. And so we're very, very focused upon our employee experience. Like everybody after COVID, we had to grapple with the Great Resignation. We've taken steps to address that. We've invested very heavily in an internal university. We have an online AI-enabled employee engagement platform that allows us to measure in a real-time basis the commitment of our employees in different parts of the world. We've taken different intervention steps to address challenges that we had in the past, and we've seen the attrition come down in a material way. Before COVID, our attrition was about 13-14%, and we fully expect in the next 18 months to bring down our attrition from 17% to the pre-COVID levels.
What kind of work you are doing in the aerospace segment? Because auto has been primarily your bread and butter so far, but you ventured into aerospace and TCHM as well. How's that sector's doing, and what kind of work are you doing there?
Yeah, we're really excited about what's going on in aerospace. Aerospace has bounced back in a very healthy way after the pandemic. The growth rates in aerospace are really being informed by the expectation that the number of in-service aircraft are likely to double in the next 20 years. We were impaneled by Airbus some 18 months ago. Airbus is a very regulated organization. And so we've been opening up offices in Toulouse and Hamburg. We've been rolling out IT systems. We've been aligning processes. We've been going through the various audits that Airbus have imposed upon us. But in the next 6 months, you'll see us start to discharge an order book that we built up at Airbus. And next year, the revenues from Airbus will grow somewhat exponentially. And so we're very bullish about the aerospace business for us. And that confidence is really inspired not just by what we're doing, but by also what the group is doing. The acquisition of Air India, the procurement of 470 single-aisle and wide-body aircraft is affording the group a great deal of influence. And we believe that that will provide tailwinds that we'll be able to capitalize upon.
Does that group synergy works for you in that sense? It brings in orders for you as well?
It doesn't bring in orders for us, but it provides us with influence, and it provides us with a network of capability that we routinely take advantage of. And so, we collaborate with other parts of the group where it makes sense. And certainly in aerospace, we work very effectively with Air India, with companies like Tassel, and also even TCS.
My final question to you is that you're coming to the market. The street would like to understand the kind of order book positions or how the order is booked. Will you be giving us some kind of guidance on how many orders you booked during a quarter or during the year? What kind of order pending is there? How do you do that?
We as a group, we don't provide guidance. So I will not be commenting on guidance on order book or growth projections. But what I will be commenting on is some of the significant orders that we are bringing in. We're very excited about the work that we're undertaking for our key and focused accounts. We're very excited about the contribution that we're making at Tata Motors and Jag and Land Rover. And at different points in time, I trust and hope that I'll be able to celebrate with you some of the new orders that we're able to bring into Tata Technologies.
Warren Harris, it was a pleasure talking to you today. Thank you very much for joining us on BQ Prime and on IPO Adda. Your IPO is opening on 22nd, price between 475 to 500. It's an OFS of 3042, where Tata Motors, Alpha TC Holdings, and Tata Capital are selling their stake. That's roughly around 15% stake that's going to be sold to the IPO. Thank you very much for joining us on IPO Adda.
Thanks, Sajid. Appreciate your interest in the company. Thank you.
Thank you.